All right, everybody. Welcome to the live trading stream. My name is Jacob Gabbard from Invest with Jacob. Sorry we got started a little bit late today. I had a little bit of a technical glitch I was working through and got it figured out. So we are good now. Hopefully you guys are having a good day and enjoying super rally mode that we've been in for a while here on the markets. If you're new here, welcome. We're going to go over today our two indicators. So the one you see on the screen right here is this chart it's called our Squeeze Sniper. This is the newest version. It's not quite out yet. It's still in testing. But you can see this is 3 weeks worth of data because we use the 1 minute chart, and that's just as far back as the 1 minute chart will go. And when I say the 1 minute chart, that doesn't mean we're trading the 1 minute chart. We're using the 1 minute for exact entries. We're actually trading the 5 and 15 minute charts and doing it that way. But we've really simplified it and made it really easy and really powerful. And you can see here over our last 21 trades, we've actually got 22, and I'll show you what I mean by that here in just a second. We actually have 22 trades. We're winning about 67% of them, and we've netted over 3 weeks 137 ES points, which if you're just trading one contract is about $6,000, a little over $6,000. But if you're trading multiple contracts, which is how the system actually works, it's for me it's quite a bit more than that. But it's a really powerful tool. The biggest thing we're doing now is moving it so it works on all. Right now it's just perfected on ES for the futures. It's built for futures, but we want it to work on all underlying assets. So that's what we're looking for there. You can see our stops are usually pretty small, 6, 6, 6, 4, basically 4, 6, and 6. And our wins, they are 4, 6, but then you get like the 17, 9, you got 9 here, you got 11, 23, 34, and 32 down here, and we're going to have another 30 plus point winner right here. You can see this stop at 73.13. So if we just kind of zoom to the left here for a while, that's not even the trade right there. That's the add-on. So the trade was all the way back here. It got long at 72.28.75. So 72.28. Keep in mind we're 100 points higher than that right now. It gave you a stop. It gave you a first target. So the first target is 72.37, so that was a 8.25 point win really quickly. And then 72.41 was a total of 12 points. And then you keep a 10% runner in case what happens here happens. Don't worry about these yellow boxes on the final version. Those will go away. It's just an audit system that I use for alerting to make sure that everything's working right. Then we have a 10% runner, and that runner continues to run up. And then if it pulls back and sets up again, you get reloads. So as we go, the 10% runner continues to win, continues to win, continues to win. We get a little bit of a pullback. Reload right here. Entry 72.87. Exit 1, 72.96. Drilled that. Exit 2, 73.02. Drilled that. And now we've collected all of that. And we are up here even higher than that. And our stop is now at 73.13 for our last 10%. So we've won 2 trades, and we still have our runner going, and our runner stop is 90 points higher than our original entry. So that's Squeeze Sniper. That's how it's going to work. It is absolutely crushing. It is crushing, guys. These big trades, they're a lot of fun. And you go to sleep, put your stop in, and just wait till the morning, and then if it's stopped out, so be it. If not, you win. And if it keeps climbing higher, you really win. So really, really powerful stuff on that. That should be released soon. I don't want to give you a date because I don't have one. And what I mean by that is I don't know what hiccups will arise in testing. And sometimes that can drag things out. I'm hoping very, very soon, though. So that is Squeeze Sniper. Now for Pivot Point Pro, it has struggled over the last month. I'm always up front with you guys and honest. And the reason it struggled, April was a negative month. We were negative $850. It's the first negative month we've had in quite a while. We're still up over $120,000 in about 2 years' time on a $100,000 account. So, we're up over 100% on our money, 120% on our money in 2 years, which good luck finding those returns anywhere else. So on Pivot Point Pro, the reason it has struggled over the last month, I'll show you in just a second why. Pivot Point Pro is on. Okay, let me just make sure I got everything here I need on. We will turn on Squeeze Sniper 2.0. So 2.0 is the current version that's out. It's got issues. We know that. We're well aware of them. So we are fixing those issues, and they are being fixed right here. But Squeeze Sniper is our current version. We'll see that today, should it come up. But it's a lot more interesting. This did not have a take profit on it. It was in the pre-market anyway. We don't take pre-market. Should have had one from yesterday that was a 60-minute trade. Let's see here. Oh, well, we had this 15. The 60 you won't see on here because of the way it's set up. 1 second here. That should update. There it is. So this 60-minute trade right here came in at about 72 something, and then it got 722 to 725 here right after hours. It took profit on one and hit its take profit two in the after hours as well. So that one did well. And then it set up for another long, and that one did not get a take profit. So that's okay. That makes sense. But this one we understand has some issues. That's why we're putting out the new version. And like I said, it'll be out soon. But this is the current version of it. It still does really well. Don't get me wrong. When I say it has issues, it's mostly about repainting, meaning that TradingView kind of messes up the trades when it closes bars, and that's more of a TradingView issue than it is a sniper issue, but it's something that we have to address because it's unfair to you guys. So those issues are being fixed, and it's a much simpler and easier product, and it is absolutely killing. So off the screen, right, where is that at? Oops. Come on, go back up. My mouse is not working right today. Show report box. There we go. Hit OK. There we go. So on the left, you'll have Squeeze Sniper trades, and on the right, we'll have Pivot Point Pro trades. So we'll leave both version 2 and the current version on over here. So if we get either trade, you'll see it. The only trade we're looking for right here would be a reload trade. So if we start to get a setup here, we might get a reload where we're looking for the market to push back higher. However, now let's get into a little bit of market discussion. We have already hit the one-day max. We are already above it in the pre-market. These types of days when the market goes ape, well, I'm going to say it. I'm going to be, big word, ready? Ape shit. When the market goes ape shit to the upside and hits its one-day max in the pre-market, very often you see reversals on these days. So keep an eye out for that. We have hit, I said last Thursday, if you watched our closing video, we do those every day at 3:55. I said that if they start gapping up on Friday towards over 7,200, or I'm sorry, over 7,200, that 7,300 SPX would be here in a heartbeat, and they're here. Right now, when they open, they will be right at 7,300 on the SPX. And I said that's also a very, very, very big call wall, and we should look for a little bit of rejection up there. So I would be looking for rejection today. That would be my overall thesis, just based on Mentor Q levels. And if you don't know what Mentor Q levels are, you can check it out at mentorq.com. I have a link in the description for a discount on them, but what they are is they are the options flow for the day and longer term. So this one-day max, you can consider that in the one-day min like a shoreline. We know where the tides come to. In general, the shoreline holds the tides every day at those places. So we can build houses near the ocean and understand that the tide's not going to change and come up and hit us. So one-day min and one-day max we think of as the shoreline. Can they push a little higher than we thought? Yeah. Can you have a hurricane that comes in and pushes the tides way up into the houses? Of course you can. We call those hurricane days when the one-day max or minimum is not respected. So the other option here is they either chop around this one-day max all day, or they have a hurricane day and they just rip it to 7,400 direct. I think 7,400 direct is probably a little less likely. I would look more for a rejection just because the call wall at 7,300 is one of the biggest I've seen. And typically those don't just get run through. So You can see it down here at 7,300 on the ES as well as 7,300 on the SPX as well. So those will both be very, very big levels, and I would look for downside actually today, even though we're up 1% and 0.7% in the pre-market. It's very possible to get a down day. Now, what I would watch for and what I would tell you is watch the ADD. When you have a 1% gap like this, if the ADD starts up at around 1,500 and then starts sinking very quickly, that's a big red flag and a big warning sign. If the ADD holds strong and is staying up around 1,500 plus the entire time, then you're not going to get a drop. You're going to get chop. So ADD will tell a story there about how the day is going to go. Early on, the first 15-minute bar should be the first kind of viewpoint into that, and then we'll see how things go from there. But that's what I would be looking for today is if the ADD comes out and starts to sink, watch out for potentially a very nice drop today, because when they do these big trades and then pre-market hit up above or at the one-day max, very often it turns into selling. So the reason Pivot Point Pro, by the way, is struggling is if you look at our SPY or ES chart, either one, doesn't matter. You have straight up bars the entire time, just straight up, right? This is the weekly. If you look at the daily, it's the same thing. Pivot Point Pro looks for pivots. It looks for reversals in the market. It looks for a place where the market's going to stop and go the other direction. Well, if the market's not giving us any stops and goes in the other direction, it's very hard for us to trade. So we had very few trades in April. The ones we had didn't work out because mostly it was trend days. We did really actually pretty decent through this chop. And let me be clear, negative 850 for the month is minus 17 cents on options. So for all the options we traded in the month, we were minus 17 cents. That's it. So it's not a big deal. We trade 50 contracts. So that's how you get 50 times 17 or 5,000 times 17 cents is 850. And that's where you get that number. So it's not like we got killed or anything. Minus 850 is very small in comparison to what our winning months are. It just was a month where if the entire month is straight up, there are no pivots. So Pivot Point Pro doesn't work so good, does it? Right? So it's just the nature of the market. When you have these strong rallies, you're not getting reversals, you're not getting switches in the pricing, you're not getting two-way trading. And when you don't get two-way trading, it's very hard to day trade. So we didn't have the best month in April, but that's just how it is. That's part of trading. And the faster you understand that losing is part of trading and going to happen no matter who you follow, no matter what system you're in, no matter what you do, you are going to be humbled by the market. You're going to have a losing trade, a losing week, a losing month. You're just going to. That's just part of trading. Now, you shouldn't be having losing years. You might have a losing year. You might have a really bad year just because. But for the most part, you shouldn't be having losing years. That's not a good sign. That's a sign that whatever you're doing is wrong. So you just have to understand that short-term losing events can pile up. Just like winning streaks pile up and you stack money, you can have losing streaks. And that's why you have to use very, very good trade management, sizing, risk reward, stops, all of the things that go with trades. If you say you use middle stop, you're a losing trader. If you say that you don't need stops, you're a losing trader. I guarantee it. You can think you're a winning trader, but if you audit yourself, I guarantee you are a losing trader. George, welcome to the stream. Hello. Good morning. Happy Wednesday. Happy hump day. Prabs, morning JG. Question, if I set up alerts for ES and NQ, will they both work or can you only do alerts for one chart? No, you can do them for both charts. You said there may be a reversal today. What is a reversal? It is when the market goes in the opposite direction. So it started high, right? We can already see some of it. You see the market started high and it's going back, reversing in the other direction. Probability say it's going to chop just like the last 20 Wednesdays. That is a fact, Arcturian. Chop is very likely today. As a joke. It's still possible. What I don't think you're going to get today, honestly, I don't think you're going to get a runaway freight train. I don't think you're going to see the market go to 7,400 plus today. It's certainly possible, but more often than not, these levels hold. These one-day maxes hold. And that is what we would expect today. Now, do they have to hold and reject? They don't have to. So we could see this today for sure. Chop is definitely one of the two options I'd be looking for. The other one would be this. And we are so due for a pullback, and this market is reaching signs of exhaustion. We're actually seeing it on the weekly chart that exhaustion is creeping into the upside. And should we see any kind of weakness, I do think that sellers will want to pile on, and that can move quickly. So just kind of be aware of that overall. But for now, bulls are in control. It's a bull market. We are raging higher, and until we aren't raging higher, we need to respect the bulls. Now, that doesn't mean I'm going to short today. I'm just going to openly say, let's short the market. F it. It means that I'm looking for downside to set up a potential short. So there's two differences between what I'm looking for and what I'm trading. Serenus, yes, I will follow up on that. I must have missed your email. I do apologize, but you'll be refunded it, and I'll take care of it. And it probably got buried somewhere, and I don't know your email from your username or anything. So just send me another email today, please, and I will definitely take care of that. I do apologize. One thing, guys, I'm extremely fair about all of my stuff, and I'm also extremely principled. And what I don't appreciate, I appreciate Serenus reaching out like this. This was very good. They had canceled their subscription last month. I must have missed the cancellation. You actually can cancel it on your own, Serenus, on the website. So if you want to do that, you certainly can, and I'll take care. Send me an email, and I'll take care of getting your refund. But you're supposed to manage your own subscriptions. However, if you send an email to cancel it, that's no big deal. I'll take care of that. But what I don't appreciate is people who forget to cancel, and then they, instead of just sending me an email and saying, hey, I got charged for this, I meant to cancel and forgot, do you mind reversing this? I would 100% do that every time, every single time. But if you don't do that and you're a coward and you go to your bank and say it's fraud or it's some sort of misinformation against my business, then I'm absolutely going to show the receipts to the bank and say, nah, you're going to pay for it now, because that's just bad business, that's bad character, and that's being a coward. All you have to do is say, you know what, I made a mistake, and I'll work with you. I have no problem working with you. I'm not here to cheat anybody out of any money or take any money. I want you to be a happy customer in my system, and I want you to make money. I want you to be collecting money, and if you're not happy with it, that's okay. It's not for everyone. But I will also, and I'll be happy to take care of you in that way. But if something happens that you forget or you're just not whatever, don't go run to your bank and say it's fraud. You bought it, you paid for it, you got it. And if you don't like it, that's okay. Just come to me and say, hey, I didn't like it. It didn't work out. It wasn't for me. I don't care. It's not for everybody. But don't be a coward. I have other words for it, but we'll just call it coward for now. Really drives me nuts. With all the sell warning on the weekly showing, if it prints, how far out would you go for options? 2 weeks or longer? What do you typically do? Oh, no, God, no, not 2 weeks. 6 months. Typically, depending on what it is. I think on the last one I went 3 months, but that was because it was a buy and we did really well on it. It was about 3 weeks ago, actually. We got it about 3 weeks ago. We took a buy. It went straight up. We actually took profit on it because we hit targets that I was looking for and I thought risk was rising. That's kind of me being conservative. The aggressive traders should have taken it all the way up to here, and now they can cash out on the sell warning. But several months. At Ominous148, cancel subscriptions when people do it then. I do. I missed one. I'm human, Ominous, and I'm sorry that I missed one. If you're not human, then good for you, but I am a human being, and quite frankly, you are responsible for your subscription. You have a account profile on my website. You can log in and cancel it at any time without any penalty or any issue or anything. If you send an email to me to cancel it, now you're putting your responsibility on me, and I'm happy to do it. It's not a big deal. Usually the email you get back is, hey, you need to go cancel it here, so that it works right. Because if I cancel it, there's a chance I do it wrong, and it might still charge your credit card, or I might not have stopped the recurring payments because I'm doing it on the back end and I'm doing a lot of things. But if you do it, it guarantees 100% that it gets done right. 100%. So I do cancel when people cancel, and they get it in their email when they sign up. I don't act like it happens all the time. I'm just saying that people do it sometimes. You need to listen better. I am saying be a good person. This person was a good person, and I was using them as an example of saying, hey, I did something and you didn't help me out. They reached out again instead of going to the bank and saying it was fraud or doing anything else. And I'm happy to help them. If they send a cancellation email, which I'm sure they did, I'm happy to take care of that. I missed one because I get about 500 emails a day. So if I miss one, it happens. My point was there are a lot of assholes out there who won't refund your money or won't work with you or are jerks. I am not one of those people because I have character and principle. And so if people want to reach out to me and work with me, I will absolutely work with them. People make mistakes on your end too, just like forgetting to cancel something and then trying to. And lots of people forget to cancel. I do it all the time where I try something and I'm like, yeah, I need to cancel that. And then the next bill comes through and I'm like, shit, I forgot to cancel it. And I may reach out to the people and just say, hey, I forgot, or I may just say it was on me. I'll just pay for another month and cancel it right this second. That's, both are fine ways to take care of it. People act like if there's one single issue that that makes you a bad company or a bad person or something happens, and that's not the case. People are going to make mistakes. You're going to have bad experiences, but instead of running and being a Karen about it, you can just say, hey, I have an issue and I'd like to work through it. And I think anybody in my rooms will tell you that I'm pretty good about that I've always taken care of any issues that arise in my room. And I try to do it as customer friendly as possible. I appreciate that, Brad. Brad says, I've been with you for over 2 years and you're a man of your word. End of story. Lots of good news coming out. Markets love to crash on good news. What does the bigger crash scenario look like? Well, the bigger crash scenario has a long way to go. We're about to open. We're okay, though. We're not going to get a trade here right now. So the bigger crash scenario is going to look like, so we're looking for potentially a 4-5 up towards 74, 7,500. Actually, I'd say probably 75, 7,600 now, given how high we've come. This wave 3 is just extended is all. So that's what we're kind of looking for. The bigger crash scenario is going to look, well, the bigger bull scenario is 8,000, and then I think you need a bigger pullback into maybe 6,800, then like that. In the bigger crash scenario, we're going to look for the same thing down, a failed breakout for a bull trap, and then down. Taking out this low down here, this is the bigger crash scenario. So the reason is you have higher highs and higher lows that create bull markets. The last higher low was April of 25 before this one, and that was the key level. Now you've made a high over here, a higher low down here, and a higher high up here. So this level becomes change of character in the market. I still think April of 25 is a monster level to take out, and if you do, look out below. But this level now becomes the kind of change of character in the market where we are no longer in a bull push. We are in a potential bear breakdown. So if they can get down below 63, 6,400, that's where you'll start to look for breakdowns. You got to remember, at no point in this bull charge from October of 22 have we broken a major support. Each low that came in, we have always made a higher low. So until we make a lower low off of a lower high, that's when you can start saying, uh-oh, things are starting to look a little different here. So as much as you want, and me included, as much as we want to talk about what can happen to the downside, where you get a lower high and then you're set up for that lower low, it's never actually played out. So the bull market remains strong in that way. You have to understand big picture context before you can understand small picture context. In big picture, we are in a bull market. So this right here, this is small picture context. In the big picture, we're still in a bull market because we didn't break the April lows. Then, okay, we pushed off of it and made a new high, and it just continues the bull trend. Had they come up here and failed and then come down and break the April lows, now we're talking about big picture context of breaking a major low. Instead, what we got was a higher low. So still a very much a bull market here. Very much a bull market. All right, let's go back over here. We've got the SPY. This is on the 5 minute. I just want to make sure I have everything set up. Excellent. Is there a possibility the match low on ESNQ was just a B wave low, therefore the current uptrend is just wave 1 of C of 5? I think you meant March low, right? Because I don't know what match low is. I'm guessing you mean March. If you mean March low, the current uptrend is a C wave. It is a B wave down, but I would not call it 1 of C of 5. No. I think that that's far too aggressive. I mean, is it possible? I guess in some world, yes. But for me, no. I don't think so. I mean, if you count this as a 1 of C, 1, this is not reacting like a 1 of C, but or acting like a 1 of C. It's very, very aggressive. It's acting very, very much like 3 of C. If you got a standard pullback, I mean, that would be targeting almost 9,000. I just don't see a world where that's real. It's certainly possible. Believe me, it's certainly a possibility. I would not have told you that 7,500 was, or 8,000 even, was where we were headed. So I don't want to tell you it's not a possibility. I want to tell you, for me, it's less likely. What's the ADD doing? It opened at about 1,100 and so far is down a little. It's down to about 1060 or so, or 1080. So it's down a little bit, but not sinking yet. Smaller chart. Let's look at the smaller chart. I like to see the smaller chart. Seeing a little bit of a bounce here, which is not at all unexpected. I would say there's a good chance they can challenge back up here around 73.50 or so. Where are we at on the SPX? The SPX is 15 over, so maybe not. This is a key time for the market makers. What I mean by that is 7,300 on the SPX is the monster call wall. And that means the market makers are underwater on quite a bit of those options. Because when you buy an option, somebody has to sell you that option, and most of the time that's the market maker. And options are a zero-sum game. So what that means is there's a winner and there's a loser, and that is it. So if they are on the wrong side of those options, which right now they are losers. You are the winner. Whoever bought the option is the winner. So what they have to do to counter that is they have to buy futures to hedge against their losing calls. So when they buy futures, that drives stock price, or that drives prices higher because the market makers are buying them in bulk to cover huge call walls. So when you have a huge call wall, that means there's a ton of calls that are making money. That means they got to buy a ton of options futures to cover that until they can get to a point where that buying pressure settles down and the buyers step away for a minute, and then they can press it down. And if they can get back below that 7,300, that's when the people with the calls start to panic, and then they start to sell their calls because they don't want to go red, and then you start to see the market come down. But until then, you're going to see gamma acceleration to the upside. Now, to be fair, they did run right through 7,200. 7,200 was a big call wall. They gapped right through it, and then they just kept going to 7,300. I remember last Thursday we were there, and I said, if on Friday with these earnings reports, if they start gapping up over night, then they're not going to slow down because the market makers are going to be underwater and will have to buy futures to hedge, and that will cause the market to just rip to the next level. So 15 points above is you're getting into that territory of they've cleared 7,300 and the market makers have to start to worry. So they really need to start pressing on it fairly soon. You do have a high here that they've kind of peaked over from on this is the 1 minute chart, so not as important, just kind of some small structure here. So you do have this high over here that they've kind of peaked over and pulled back to. We'll see if they can kind of build this mini 1 minute head and shoulders and come back down into 7,300. But until then, the bulls have power. Now the ADD is starting to fall. It's down to 1050. So it's down, it's down about 50 right now, which is not huge, but it's certainly not nothing. It opened at 1105. So it's down, it's down a little bit. Nothing crazy yet, but it is moving in the downward direction, so the negative direction. Vold is lightly green, not what you would expect given the kind of overnight move that we saw. So they're trading at the most traded zone right now. You can see this black line. That's the most traded zone of today. We'll see if the bears are able to start pushing down on it here. So the left is the ES 1 minute chart. We're on the 1 minute because both snipers run off the 1 minute chart, the current version and the new version. And the right is the SPY 5 minute chart because that's what Pivot Point Pro runs on. And we're looking for trades on Pivot Point Pro there. ADD now down to 1,000, so it's down almost 100. It's moving pretty quick. It's actually doing what you would expect here, or what I would expect, but based on my pre-market analysis that I gave you guys, that we're up above the 1-day max for a little bit and have retreated from it, kind of back testing here, and then I would be looking for potential rejection and downside today. Again, the other option is they just kind of chop and it's just a rough day for everybody where they just kind of stay like this. But I don't expect a runaway train back above the highs. I don't expect them to gap and go today. Down into the 900s on ADD now. guys, if you look at the Mag 7, they're not doing so hot. You know, this is all semiconductors. They're up. The semiconductors are on 385. You've got the Meta's down, Microsoft is down, Netflix is down, Tesla is down, Apple is down, Google is running hot. Very good on Google. AMD, this is insane. 20% run there. That was a big extension on 3. They were in a topping zone and just ran right through it. If you're new or just don't know, the black line is VWAP, the blue line is the 21, and the red line is the 8. Those serve as support and resistance zones and trend validators. So when the 8 is below the 21, pressure is down in the market, and the trend should be trying to work its way down until they can flip that and get the 8 back above the 21. When the 8 is above the 21, pressure is up in the market. When you are moving down, you can see that the 8 is your momentum indicator. So as long as they're holding the 8, pressure continues to push down to new lows. Once they get back above the 8, the 21 is your trend validator. So if they get to the 21, you want to see them reject it and continue down. That tells you the trend is still strong. If they get above the 21, then you want to see them, if you're a bear, you want to see them get back below it very quickly. Those are ways to identify market direction. Right now, it looks like the bulls are going to try to make a push here through VWAP if they can. And the bears are going to want to hold here and get back below the 8 to solidify this downward position. What do market makers do in this type of situation to go below the call wall? So eventually they will continue to sell calls. And they will try to put pressure on the put side of things. So they'll try to pressure the calls into, so they're running a two-way street. They are trying to push price down on the option side. But if they can't push price down on the option side, they are backfilling it with hedges on the futures. So they're buying calls to stay on the positive side. Their goal on the options is to be delta neutral. In other words, they want, no matter what price does, goes up or down, their delta remains at 0, which means they're not making or losing any money as price fluctuates, because they just want to collect the squeeze or the spread. So just like a bookie, and all market makers are essentially bookies. Just like a bookie, if you have to bet with a bookie, depending on the juice you have to pay, a standard juice is 10%. So if you bet $100, you're not going to get 100 back. So you have to bet $110 to get $100 back. And what the bookie wants is he wants $100 bet on both sides, so he can take your 100, pay the other guy that 100, and collect the $10 that was extra. So the other guy had to put in 110. You had to put in 110. You only got 100 back. He takes the $10 from you got the spread and makes money. So that's what the market makers want is they want to be delta neutral and just collect the spread on each option contract. Ponzi Zombie Killer, welcome to the stream. Thumbs up and peace back at you, brother. Thanks for being here. A lot of chop here early. Only about 17 minutes in. So we have our opening range built 73.45 to 73.27. We'll see which side of that breaks first. Your opening range is your first 15 minutes, by the way. A lot of people trade off this. I don't necessarily, but they say if the opening range breaks to the upside, then you can see a bullish move, breaks to the downside, a bearish move. But your opening range is set now 73.45 to 73.27. And it looks like they're trying to break it to the upside. ADD now down to 860, so it's dropped about 300 now. Now it is moving pretty quick. This is, again, warning signs for the bulls. On the 1 minute chart, they failed the top of the range here. So very often when you can see them come back to the bottom of the range, we'll see if that happens. They got to get below this support that they just came into, 73.37. That would be what you'd want to see them fail. And then you could see them push down to the bottom of the range and see if they break through the bottom. Well, there they go. That was a good one. Came down into VWAP on the ES and bounced a little bit. should be. There it is. All right. Well, so we had an alert there. I thought we did. My screen was old. We've already hit take profit 1. So we had a reload at 73.32.25, 73.37 got hit. Now 73.52 is the next take profit target to the upside. We'll see if the bulls can play that out. ADD still sinking though. I'm seeing it at low 800s. So we'll see if the ADD can make a recovery. If not, then I do believe we'll see some kind of bigger downside play today. Options prices not super inflated, which makes sense. I mean, we've been running up and the VIX has been getting crushed, but they're not projecting anything big as of this moment. Remember, guys, this original entry was at 72.27. We're at 73.41 with 2 reloads where we've taken profit on. Absolute crazy. JG, are you waiting for a sell or buy on the day trades? It would be a sell, but we still got a ways to go on the buying side of things. So not a ways to go. ES is now entering buy cycle. NQ's pretty close. We probably have another bar or two before we can see a sell, but we would be looking for a sell. Guys, if you want to get Squeeze Sniper, it is available right now. It's still the original version. This version here, though, that you're seeing on the screen, will be out very soon. And once it comes out, the discounted price will go away. So it's discounted right now because it does have the repainting issue. But once it comes out, it's going to be more expensive than it is currently. There's a link in the description of this video if you want to check it out. This is the second reload of this singular position, again, that started all the way back at 72.28. And the whole idea of the trading cycle here is to keep you from getting FOMO. So we trade, right? We get our original trade. We hit take profit 1, take profit 2, and we leave 10% of our trade as a runner. If that runner comes down and stops us out, we didn't miss out on anything. I mean, we gave back a little bit, but not a lot because we took 90% at profit. If they do what they did here, though, the market goes up 50 points and you've got 10% of it and you have a chance to reload that on certain pullbacks. So you're staying out of FOMO of, gosh, the market keeps going up and I don't have any piece of it. And you are able to continue to add on to that so that not only are you getting 10%, but at certain times you can get, reloaded for a whole full trade to the upside when the proper setup presents itself. So it's really a constructed to keep your mind from getting bored. So when you aren't trading and the market's moving in one direction, you still have a piece of it. You still have a trade, so you're still making money. You're not sitting there going, gosh, I wish I was still long. You are still long. and you're long for the right amount, because getting a 6 to 8 point move in the ES is very, very good. Um, and getting a 100 point move is even better. So always understand that as price continues in your direction, the risk rises of exhaustion and turnaround on you. So if you've got a trailer that's running up, and this stop trails automatically, so the stop started all the way back, at like 72.22, I think, and it's trailed up to 73.26 now. So um, keep all of those things in mind when you're trading, and that's how this is built. It's built to keep you from getting FOMO. ADD down in the 700s now. If you currently have the original Sniper, we will automatically have the new version uploaded to our TradingView accounts. Yes, you will. Yeah, if you already have it, that's the next version. It'll just be an update, and you'll see a little blue circle. Let me see if there's one up here that no. A lot of times the Mentor Q levels have circles on them because they update during the day. But there'll be a little blue circle right next to it, right here where the eyeball is, and you click on that circle, or you can come over and hit the dots, and down here right in this area somewhere, it'll say update to latest version, and you can do that as well. But yes, you'll automatically get updated. So we are a half hour in, and you have two red bars on the ADD dropping about 350 almost. It's starting to show a little signs of life here, a tiny bit of green, but nothing crazy. We'll see if it is able to continue falling or if the low of the day is in. The further they get away from 7,300, the more on the SPX, I should say, the more the hurricane day becomes likely. But at 7,350, we'll see how they react up here around the one-day max and the overnight high, which is all the way up at 7,366. So this zone up here is going to be fairly important if they can get there. Your chart shows a sniper fire. Mine does not. No, this is the new sniper. Remember, it's not out yet. You don't have this one. This is a reload number 2. This is the new sniper that's not out yet. It's in beta right now, and I'm just showing it to you guys how it works on the chart so you can see it. So they broke out of the opening range, came back, and now they are testing the top of the opening range. This will be short term a interesting level. We should see the bulls defend here and push again back toward that 73.52 target and above if they're going to stay strong. Just as an FYI, um, we are looking for a sell now. My current strike is 729. So this will be a Pivot Point Pro snipe. I'm sorry, Pivot Point Pro trade, not snipe. We're not using sniper right now. Let's go to day trade alerts. Make sure that that's ready. Super Dave asked if, sorry if I missed it. Do you know when updated sniper will be ready? No. So all I said was soon. I don't want to give you a date or anything because um, we have it tuned in completely on ES. It's absolutely crushing. Um, I mean, it is awesome on ES, and we are migrating that into other assets, and that takes some adjustments. And I just don't know how many headaches we will get during those adjustment periods. So I don't want to say like this week and then run into headaches that we can't get solved by the end of the week. So soon, we are very close. We have it done on the ES. Like I said, the ES is done. Again, you won't get these yellow things when you get it. These are just for my auditing purposes. All right, headed toward take profit two here. They're just about 2 points away. Oh, 3 points now. They were 2 points away. These are spots where if you are a little more of a cautious trader, you are up, off of the entry, you are up 16 points right now. So 2 more points isn't going to make or break you. It's like $100, and you could take profit here if you're cautious, so that you don't, lose it all back. Or you're not going to lose it all back. If you followed the instructions, you're going to make money because you took 75% here, and your 25% isn't going to override that. But my point is, if you're a little more cautious, they should hit 72.52. I would think they will, but you're stepping over dollars to pick up pennies, in my opinion, here. So if you're a little more cautious and you don't want to wait for the extra 2 points, because they could very easily reject here, that's up to you. I wouldn't be doing it like 6 points away, but 1 or 2 points I think is okay. Um, Especially on these bigger pushes. So, your first one was only 5 points because that's just where the next level was. And then your second one was off of this one was 15 points. 15-point pushes are tougher to get. So obviously because they're bigger. So I would understand if you said, hey, you know what, I'm going to take profit right now, even though it's very likely to hit. That's up to you. And it's about to hit almost 50 cents away. All right, there's your second profit take. 19.75 points realized, 2.67 because you only had 25, you took 15% off here. You took 75% here because we want to front load the win. Then we took another 15% off here and leave our 10% runner. And now our stop is down here at 73.26. And we've now had two reload winners on this trade that's been going from 100 points back. So there's your alert to tell you it was hit. And these are things I would definitely have orders in for at 73.52. You can see it hit it on the number and rejected. Um, it doesn't have to fully reject here, but it can. And if you're waiting and you're trying to do it manually, you may miss that number. So I would definitely have an order in for it. On your end, does no, I have both versions running right now. The other sniper is completely different than this one. We had to change it around because of the repainting issue, so you're not going to see the same trades at all. Similar, I mean the concept is the same, but they work differently, and quite frankly better. In the process of redesigning it for repainting issues, we also found much higher profitability issues, or profitability wins, I guess. I don't know how to say that. Much higher profitability version. That's what we'll go with. So it is. It's been awesome. I can't tell you how good it is. We've had 22 trades in 3 weeks, so that's about 15 trading days. So you're getting about 1.5 trades a day plus reloads. So, you got 2 reloads on this one already. The reloads are not counted as their own trade. So inside of that 22 trades, you had some reload trades as well. I have Sniper 1 and it's great, but can't wait for Sniper 2. I agree. Sniper 1 is still great. Don't get me wrong. When I say it has issues, that doesn't mean that it's not a great tool. It's an incredible tool. It's just that the repainting is really annoying. It's just not. It works exactly as designed as far as giving you the entries and the take profits and everything, but TradingView screws it up when they repaint the bars, and that is something that we've had to work around in order to make it so that that doesn't happen. We are still looking for a sell that won't come until we see some weakness. We almost got one here. We were very close right here to getting a sell on this bar. Luckily, we did not because we got eaten up real quick, which is why we have to see certain conditions fire to get a sell or a buy, and that didn't quite get there. Which is good because I hate trading against Sniper. I always defer to Sniper over the Pivot Point Pro because trends are stronger than reversals. And this doesn't mean that reversals aren't good. They're very good. But trends are stronger than reversals. So if we've got a squeeze playing out, which we had here, we don't want to be trying to short into that squeeze. So I'm glad it didn't come up. Super simple to use though. I mean, it gives you your entry. It tells you exactly what you're putting down. So full trade here. So you had a 10% runner. It's telling you add back 90% to a full trade. Your entry, your take profit 1, take profit 2. So you get everything as soon as it enters. So you can put in all your orders right up front and then go eat lunch or something. You know what I mean? You don't have to sit in front of the computer all day with it. Once you get the trade, you can set it up and walk away. We've got your stop in. Okay, let's see if we get a sell here. I am still sitting on 729 as a strike. ADD has climbed back up to 826. Certainly nothing crazy, but it is stabilizing. So it was sinking early, but now it's stabilized a little bit. That could tell us that we're getting more likely a choppy day, but if they do start accelerating again to the downside, that would be something to watch. Coming back into the 8 on the SPY 5-minute, that's going to be your momentum indicator. So right now momentum is up, and they are back testing the momentum indicator, which is the 8 exponential moving average. And if they get through that, then we'll look for them to continue, but that at least continue down to test VWAP in the 21, slightly lower, not a whole lot lower, but it is slightly lower. And then the most traded zone at 729.08. Essentially, this cluster right here, if they get below that, basically 729.05, then I would expect them to at least come down to 727.79 and potentially break through and go lower. We'll see how that reacts once it gets there. But this cluster up here below 729.05 basically, or 06, whatever, I think will at least bring us down to the low, 727.82, the opening low, I should say, the actual regular trading hours low. The NQ's been a little bit weaker, has not had quite the acceleration that the ES has. I mean, it's stronger overall. It's leading today, but I mean, in this last, I'm talking minute-to-minute bars here, it hasn't been quite as bullish. The 73.50 and 28.5 area providing some resistance here. We'll see if they're able to push through it or not. Looks like they're trying to here. Kind of now or never for the Bears because the NQ has entered its sell or its buy weakness, which would be a sell alert, but the ES has not. The ES is much stronger, as I said. So this minute and then the next candle need to kind of follow through, or we will be out of the synchronization zone that we're looking for. Still sitting on the 729 strike. The answer is yes, but that's gonna right there is going to eliminate the sell possibility. So what happened was, so you guys are aware of how this works. This move here on the NQ, let's go over to the NQ. You can see it was a lot different. The NQ had much more selling going on here. And hello, cats at home. This is triggered on the NQA sell, and then it got back up to where that sell went back into a buy. And what happens is when you get that staggered event, it won't allow the next sell signal because it's saying, hey, this is not strong enough selling. It's very weak. So each time we see a sell signal, it's likely to fail. So it's not going to give us sell, fail, sell, fail, sell, fail. It's just not going to give us a signal because it's saying, hey, the bulls are strong here. We don't want to get involved. We will sit out. So we are not going to get a sell signal to the downside because of that. And this has been the theme of April. And this is a good thing, guys. I know you may think, oh, well, what if it snaps down and goes way down? It could. It certainly could. But going back through April, we were, like I said, we were negative 850, which was 17 cents on options. So it wasn't like it was a lot. It was just 17 cents. 850 with what we're trading is not that big a deal. But the point is, I went back and looked at all of the old trades on the old Pivot Point Pro, and we would have gotten eviscerated in April with the old one because you would have had all of these buy and sell signals come back to back to back. We would have hit the 3 strikes and you're out rule on several days. It would have been an ugly month. So the updates are saving us a lot of money and doing really good. We just haven't had great trade setups. You know, right now you're in a long chase and we don't chase. We're looking for pivots. And like I said at the beginning of the video, when the market is going straight up, you're not getting pivot points. You're just getting acceleration. So for a pivot or reversal indicator like we use, it's not great, which is why Sniper's doing so great. It's crushing, obviously. But it crushes in that environment and in the selling environment as well. So it's a little bit built a little different. So overall, both products are doing really well. This last month, though, wasn't really good for Pivot Point Pro. Are you trading futures on a prop firm? How's it going? Give me a minute. It's going really well. And the answer is yes. Time to short SMH? I don't know about that. Did it give you any kind of setup to short? Remember, we don't just short because it's gone up too much. It's proven that that's not the way to do it. It'll run you over and then run you over again and then run you over a third, fourth, fifth, and sixth time. So I don't short just because something is going ape shit to the upside. I short because there's a setup. So for me, no, not time to short anything. Well, not anything. I'm sure there's stuff out there you could short, but I'm not shorting the ESNQ or SMH. That's for sure. Yet, don't get me wrong. I'm looking. There's just no setup yet, and until there's a setup, I can't really get on board with shorting. You're just stepping in front of a freight train. If you are shorting because you think the market has gone too far, then you're shorting on emotion. Oh, we need to go back over to the ES. One second, guys. Sorry. Got a text I have to answer real quick. I feel like, did I just get a... I did. Why is this not... $10:30, we got an alert. Well, technically, I think we got another... Yeah, we did. There's the alert. We got another reload here, right here, that didn't appear on the dang chart. I swear to goodness. I swear to goodness, guys. We had this fixed, and now... anyway, super annoying, super annoying. Anyway, there was a question here, and I needed to answer it, so give me 1 minute. I have to send the audit in. Why is this not... They have blown through the 1-day max, by the way, so I could be wrong. I guess we could get a hurricane day. I do, as they push higher here away from 7,300, the market makers just have to continue to hedge. So I did not think that this would be the case, and it still may not. They're just above the 1-day max, so it's not like they've blown it away, but they are back above it. So we'll have to see how it works out. We could. I think chop is still the most likely scenario. I don't think we're runaway train today, but they're on their way to proving me wrong. Almost done here, guys. One sec, sorry. So I'm not a big results shower because I think it's personal and to each his own, and all of my trades are documented. But somebody asked just now about how the prop firm is going. So here's this week's stuff for that. So actually, this one just came out yesterday. For this is mostly, I mean, all of our trading, but this is a lot of sniper stuff that I use for this because it's futures driven. Um, I use Pivot Point Pro when applicable, but for the most part on my futures, this is a futures account. Um, you guys hopefully can see that, I think. Can you guys not see that picture? Thought you could see if I did that. Maybe not. You can see it. Okay. On my YouTube side, it doesn't show that it's showing. So it's going well. It's going well. The being able to control that much money for that little money is an incredible thing. I was ill informed on prop accounts. They seemed a little odd to me. I didn't understand the concept until I met with some people who run a prop account, and once I did that and understood how they worked and what they were, I did not see any reason in the world you wouldn't want to do it. It's a incredible um, way to trade a lot of money for a little money. I'm just mostly angry about this now. I need to understand why this is not coming on today. This is literally the first day this has happened. All week I've been watching this, and we have not had a single issue. I don't know if it's a trading view issue or what, but we have this current reload number 3. We've already hit take profit 1, which was 73.57. Take profit 2 is at 73.64. Let me see if I can get, which is just below the pre-market high. I'm going to refresh and see. I don't understand why it's not coming on the screen. It's so annoying. I have to screenshot this. 1 second, guys. And once again, Sniper Pivot Point Pros updates save us. We would have shorted before on this move down, and we did not. And then they ripped it back up. So there's a reason we didn't get shorts there. Okay, let me screenshot this. Have you figured out how to automate the trade from the signal to the prop account so you don't have to be there to execute? No, I don't do that. I do not automate trading whatsoever. As far as that goes, I am anti-technology in something that is controlling my money specifically. So if the technology fails to put in the stop correctly, or fails to fire the stop, or fails to read the numbers, or does something incorrect, I can get liquidated completely on futures. So there is zero chance I will ever automate that. Zero chance. Well, the trade engine is calculating all the stuff. The chart is for whatever reason. I'm gonna go away from it and then come back to it and see if that does it. I've tried reloading it. Let's go to the SPY. Let's go back to the ES. Okay, let's try turning it off, turning it back on. That's not gonna do it. Okay. Let's try removing it. Go to indicators. It's here somewhere. Where'd it go? I must have it named. Something else. Gosh darn it. Is it this one? No, that's not it. Well, that was dumb. No, I don't. All right, 1 second, guys. We're going to switch charts. We'll go over here real quick. We'll put this back on ES. Looks like take profit 2 was just hit. So, I mean, it's crushing. We're doing good. That's for sure. I just have to find out why that alert didn't come on the chart. Uh, This is a pretty insane move. Sorry, guys, I'm trying to find this stupid indicator. I don't know what I saved it under. I thought I had it saved under something else, and I don't. So I got like 20 of these things that I'm testing, and I got to figure out which one it is. This is a pretty incredible move, though. I will say that. How can option sellers afford to sell options at such low premiums? Yesterday, ATM calls and puts were trading at around $2 for SPY. When market moved more than $6, tomorrow options are cheap because low volatility. You're pricing options incorrectly. One-way moves up are not volatility. That is expected move. That is understood, and they can be off on price. You know, the one-day max here was 73.55, so options are priced based off of those levels where the most money is. It's a supply and demand issue, is how options are priced. So the um, the options prices are based on the I mean several things, but volatility is the biggest one, and if volatility is getting smashed like the VIX is, then options prices are going to get smashed down. Well, guys, as I mentioned, we are not going to get a sell, and we are going into the last quarter hour here of the day, of the not of the day, of the 10 o'clock hour, which only gives us about an hour and 15 minutes to even potentially get a trade. And for that, you would need to see a fairly significant pullback and then a move back up. I don't think that's a very likely scenario. I think chop to up is probably the letter of the day today for the rest of the day. I do believe, honestly, that getting back below 73.55 is likely. However, I don't do things just on what I think is likely. I would not be trading for that. You do have a sniper long, a 60-minute one at that. So this is the version 2.0 sniper, and it's a 1 hour long. So do be aware of that. I think I need to change that back to put these back on. Whoops. Wonder if we had any other snipers on the chart. At any rate, that is what we're looking at. So you do have that 60-minute one there with a 73.41 stop. Up to you if you want to mess with that. But overall, I need to send this screenshot over to my coder and figure out why this last alert didn't come on the screen. That's very annoying to me. So we'll see what's missing there and why that didn't work out. If you want to see how those options market is rigged against retail investors, just look at SMCI calls after an 18% gap higher. They're not rigged against retail investors. They are priced a certain way and done a certain way. I think you just have to understand the liquidity issues of certain assets and understand that how they're actually priced and derived. It's not just on the price of the stock. The price of the stock is one of the lower features that drive option pricing or the movement of the stock. Remember, up, guys, is the expected direction of all stock markets at all times. And when volatility comes in, down comes in fast. So this is a slow grind up that option makers can deal with, right? Each minute they're going up maybe a point or two, 5 points, a point or two, back down a little bit, a point or two, a point or two. When you sell in these environments and it's going to get volatile, you get this. This is hard to deal with. This is hard to hedge against. This is a hard move to deal with. And you get that on the downside. And that's why the volatility prices options so high, because in the blink of an eye, you're down 30 points and they have to cover all of that. And so they want to make it harder for you to get in at that price or riskier for you to get in at that price. So these are easier for them to deal with. Slow grind higher. They can set up really easy hedging structures. Downside, when it starts to accelerate, becomes very, very difficult to hedge against because it moves fast, it gets to a target fast, and it reverses fast. So volatility raises, which means your price has to raise, which because their risk is higher, and so is yours. Therefore, so is yours. So when the expected move is happening in the expected direction, market makers are covered. When it's not, and they have to guess, and they have to hedge really hard against really fast moves, that's when things get hairy for them. They're massively overpriced after an 18% gap higher. I mean, I don't know if they're massively overpriced or not. They're covering their risk. If they gapped higher, that means overnight, all the people who were long are collecting, so they have to massively hedge, which will cause all of those prices to climb very quickly. I don't think that you are understanding the risk reward side of it on their end. They strictly are pricing them based on their risk in the market, and their risk is getting crushed because the gap is so big. So they are the options prices reflect that. If you want to continue to buy longs here, you're going to overpay for them because of the risk entailed by them. So you got to remember, when you're selling, you're taking on all of the risk because price can go infinitely lower, or I'm sorry, higher. Excuse me, wrong way. If I sell you a call and price continues to go up, I continue to have to pay out money. So when I'm selling the option, I am taking on all of the risk. Your risk is fixed at whatever price you paid for the option. My risk is not. I have to buy back that option at some point or just eat it, eat that liquidation. So they're not going to do that. So they have to amp up their risk. Just like if you were selling insurance to somebody who lived on the Florida coast, hurricane insurance, it's going to be 50 times higher than it is if you're selling it to somebody who lives, say, on the LA coast, because hurricanes on the LA coast don't exist, but hurricanes in Florida happen about twice a year or more. So I have to amp up how much you have to pay for that because my risk is really high that I'm going to have to rebuild your house in some way due to water damage and or wind damage and or storm damage or whatever. So when the risk is high for me, I have to charge you more. That's not me colluding against you. That's me leveraging my risk against you. They were massively overpriced yesterday pre-earnings. I don't think so. If it went up 18%, I think they priced them exactly right. Remember, they're the ones taking on the risk. So if the projected move by the market makers is however many percent they had at, I don't know what they were priced at. I don't know any of it. I don't know the details. But on a standard day, let's say Disney today was projected at 6%. Okay, that means they're $3 on either side of the trade. That's them managing their risk. You have to understand earnings are a major catalyst. That's a major risk to them. They probably got smoked on AMD because they were only looking at 9%. It was up 20%. So they are taking on all of the risk. That's what you have to understand. That's not colluding against you. If you're trying to get rich on earnings gaps, you're never going to do it because they're always going to massively overprice them because they're taking on all the risk. That's what you're missing. They're not saying, hey, I'm going to screw Jimmy out of his money. They're saying, hey, we may get screwed out of our money and we're not going to make a bad bet, right? Do you think the market makers are out there trying to lose money? They're not going to make a bad bet. They're going to say, hey, this is going to move quite a bit based on what we know and what the price says and what the options are. So we have to price them accordingly. That's not them working against you. That's them managing risk. And that's what you have to understand. Now, don't get me wrong. The market is designed to work against you. Don't get me wrong on that. It's designed to work against you in this short-term trading field. Long-term, not so much. Short-term, they're very, very much pushing your buttons over and over again, and they programmed you so that they can push those buttons and make you do certain things. Part of that is options pricing. Part of that is how they move the market to certain levels in certain ways. Part of that is how they trap you. Part of that is understanding it. The reason this indicator right here is so successful is because it's built on the traps that they set. It's built specifically on the traps that the market makers set. Mike, I don't know who Mike is, but I don't know what he's doing here. He should probably leave. You're providing a rationalization for a rigged casino where the dealer inserts numerous aces to use against you because he doesn't want to lose money. I don't want to sound mean here, Mr. E, but that's going to be the attitude of a trader that's not going to make money. This right here, 67% win rate. That's going to be higher because this one hasn't closed. This one right over here hasn't closed. It's going to be about 70% win rate. And 136 points over 3 weeks. And the cash outs that I just showed you a minute ago are all based on understanding how the market makers price everything and how the traps are set and how the market works. You are caught up in what you want to hear the TVs and the algorithms and the market makers want you to believe. And that there's nothing wrong with that. It's the way it is. Everybody is that way. Everybody's programmed to believe the market operates a certain way. It doesn't. It operates a different way. And quite frankly, it is used against you because humans are emotional and humans will make emotional decisions. And emotional decisions are losing decisions. Always. Always. When call options at the money only go up 150% on an 18% gap up, that's massively overpriced options. Then it's a bad deal, right? That's like saying, hey, if you've got to pay 28% interest on your car loan, that's massively overpriced. Then don't take it. That's a simple solution to me. Don't take that deal. Take a different deal. Take a better deal. You know, if you're looking to get rich overnight on, again, earnings trades, I would caution against that. I think that's a bad trading strategy. I think it's a losing trading strategy. Trying to catch overnight high interest or high priced option moves, for me, is not a great strategy. I think it's way too high risk, high reward. And the rewards are, like you say, not that great, not as great as you would hope. So I'm not saying they're not overpriced. I'm saying that they're at the level of risk the person is taking on, and you don't have to take that side of the risk, right? You can take a different trade. You can trade on a different asset. You don't have to trade that asset. There's 1,000 assets out there to trade. Find the one that works. I understand exactly why they're priced where they're at because that's them taking on their risk and saying, we don't want to be liquidated, so here's what we think is a fair price. Do you think it's fair? Then buy it. If you don't think it's fair, don't buy it. You know, if you're talking to me, I'm never going to go buy a $200,000 car. I don't like cars that much. I don't care if it's a Lamborghini or anything else. I just won't have it. It's not a good price to me. So I'll just buy a different car. You have to assess what's good for you and then make decisions that work for you. If you think that that's overpriced, then take a different trade. That's all. Clownworld.fart. I don't even know what that means, but it's funny. Sell straddles for earnings. Then when premium deflates, collect. And of course, if the move is insane, you'll probably still lose. Yeah, I just stay away from earnings. I mean, there are times that earnings can make sense for a gamble, but I think earnings are always a gamble because good earnings don't mean good price. Bad earnings don't mean bad price. Setup on the chart means, whatever it's going to mean, but I would much rather play a strong setup than an earnings coin flip. And not that earnings are coin flips per se, but there's been a huge study done on knowing market news, and earnings are part of that. And the study concluded after going through a million different things that geopolitical events, earnings, whatever, all those things, inflation, blah, 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 Fed announcements. After going through all of those things, it concluded that if you had the news ahead of time, if you knew what the Fed was going to say or put out before the Fed meeting, or you knew what the earnings release was going to be before the earnings release, you still only had a 50-50 shot of getting it right. Because people don't understand how the market works. So if you want to trade those things, that's fine. But if you think they're overpriced, then don't trade them. You can be frustrated with it for sure. I'm not saying you can't be frustrated. That's frustrating if they're overpricing options. But then you have to say, but that's their risk. So what am I going to do? I just don't have. It's like when people tell me, I don't like what ESPN has on, and I'm going to call them and complain about it. Just change the channel. There's 400 channels out there. I'm using ESPN as an example. Nobody really complains about sports, I don't think, but just change the channel. Don't watch what you don't like. Don't trade what you don't like. Just move on to the next thing. I mean, you can be frustrated, of course. I'm not saying don't be frustrated that they're taking away the types of trades you want to make, but you also have to look at their side of it and say, I don't think they're going to give me a bad deal. Like, for them, they're not out to lose money either. I'm not out to lose money, and neither are the market makers. So I got to figure out how to beat them, and I beat them through understanding how they trap, and I trade on their side of things. Because guess who's the casino here? I want to be the guy inserting the aces into the deck, Mike. I want to be the guy on that side. So if I can understand how they trade, I'm going to trade with them because they're the ones making the money. And that's how this indicator is built. It's built on how the markets trade, not on how the public trades, because the public is wrong most of the time. All right, that's a rant. Got off on a sidetrack there. Market's just ripping, just absolutely ripping. Up 1.18%, blew through some major call walls. I can tell you this is now, let's go to the big chart real quick. This is insane, guys, because there were call walls here at 7,000, destroyed, not even looked at. You can see right here, they got to it, not even a tinge of pullback off of this huge consolidation breakdown zone. Almost always you're going to get a little bit of pullback there. Down here at these lows, tiny bit of pullback, acceleration right through it. Didn't even acknowledge it existed. The only place you got a little tiny bit of acknowledgement was down here off of this low. You got a little bit of a pullback, and then the rest of it went through every single call wall and every single resistance without talking to it. That doesn't happen without repercussion. There will be a reversal. And when it comes, it'll come. Don't step in front of the freight train. I'm telling you that. I've told you that for weeks now. Do not step in front of the freight train. Wait for a setup. Interestingly, NQ not really showing the same pump this afternoon. No, I said earlier NQ's weak in comparison. It's higher. I mean, it's doing better. It's outperforming. But in comparison of the day of how it's trading, ES is pushing much better than, say, NQ. I mean, NQ's got a good bar. Everything's fine on NQ. I do think, by the way, 30,000 is basically inevitable at this point. I said if they got through 28,000 with some force, then we'll see 30. That doesn't mean they have to go from here to 30,000. We can certainly see this. But I do think that we will see NQ 30,000 before any major top has been struck. And that's 1,500 points. 8,000 still a ways away. I don't know that they can get to 8,000 on the ES. It's certainly possible if they get the right setup. It's certainly on the table. It's not something that's even like way, way, way on the back burner. It's kind of on the middle of the stove, but we'll see on that one. But NQ, I'm looking at 30,000 now as a very likely target. And then we'll see what happens around that level. Very rarely are they going to hit 30,000, call that the top and be done. They may get to 29,800. They may get to 20 or 31,000. They may get to 30,250. But around 30,000 is where I would look for the next major topping area to potentially be. But until you see some kind of weakness here, remember the .com bubble, how fast and how far it went? We weren't talking thousands of points like we are now. We're talking hundreds because of the size of the market at the time, but it was pretty insane. Trade with Jacob is one of the most reliable Elliott Wave analysts, and Jacob is one of the few true human beings sharing concepts that put money in people's pockets. George T., thank you. I really appreciate that. That makes my Wednesday since we didn't have any trades. Well, had a few reload trades on the Sniper, new Sniper version. That one is, guys, I'm ready for it. I just need to get it. I'm really upset. I wonder if the other Sniper's messing with it, because I never have it on when those two are both going. I don't think it is. I don't know what's going on. It's really bothering me, though. Really annoying that reload number 3 didn't come on the chart. It's right here. So it came on the chart. Okay. Anyway, there was a reload 3 here that had 2 take profits that both hit. Again, this one's going to be a monster. I mean, we're up from that 150 points on the way up with 3 successful reloads. That's going to be a really nice trade. The 10% runner still just crushing. It's awesome. So anyway, that's where we're at. It's 11 o'clock. I'm going to go try to figure out why this alert didn't come on. Sorry, Wednesday sucked, guys. No trades. Oh, by the way, whoever asked about updating, there's that blue circle right there. It's probably on Mentor Q. Yeah, so you'll see that blue circle. You can see it right here next to Mentor Q level. You hit that, and it'll update to the newest version, and that will be this version once it's ready. So if you only trade ES, I don't know. I can't do that. I was going to say I can maybe give you this version now, but that would be a lot of headaches because I would have to make it a separate indicator and then move it back over. Yeah, we're not doing that. So sorry, I was thinking out loud there. I talk through it with you guys in real time. Okay, we're going to shut it down here. Nothing happening today, just a trend day higher. I'll be honest, I am a little blown away that they just ran through the 1-day max, the pre-market high, the call wall. I mean, they're eviscerating every short in the market, and the market makers are paying for it or having to hedge, and that means push until we're done. So you can see these blow off tops go really, really hard and really, really fast, and that's what we're seeing. Again, don't step in front of the freight train until you have a setup. All right, guys, if you're in my room, we'll be back in an hour for the live call. If not, I will see you guys at 3:55 for the closing call or next Wednesday. Thanks for being here, everybody. I appreciate it.